Okay, we're going to go ahead and get started. Good morning, everybody. I'm Susan Couch, and I chair the Science, Medical, and Technology Committee, and I have the good fortune of bringing great speakers and topics to the HASP group. This morning, we have Jereme Axelrod. He's going to be talking about introduction to cryptocurrency, NFTs, and more. I think it's a big topic right now of interest to many people. Just a couple of things before we get started. All your mics have been muted at this time, so we have good, consistent communication here with the presenter. We want you to place your questions in the chat room, and right now we're planning on questions going to be picked up at the end of the presentation, but Ian will be monitoring the chat room, and if there's a question that he determines that it needs to be answered right away, he'll bring it up. And I also want to mention that the call is being recorded, and it has begun already. Let me just give you a little background on Jereme. Actually, Jereme is my husband's nephew. We've known him for a very long time, and he's just a great person, a lot of fun. And he's managed to venture into the cryptocurrency world, and he's very happy to share his experiences with us today. He began his career in business development at Yahoo, and then he later monetized some of the internet's largest properties while at the Rubicon project. He then went on to work for Verizon, where he worked with Snap and AR/VR creators to show off the power of 5G. Jereme has successfully invested in crypto for 8 years and now does so full time. He holds a bachelor's in film and economics from Wesleyan University and an MBA from Columbia University. So I'm really happy to introduce Jereme, and Jereme, it's all yours.
Great, thanks, Susan. Happy to be here. So we have a lot of content to dive through, so let's just jump in.
The Boris Boudery thing came through, and some clothing.
So first and foremost, I just need to say that nothing in this presentation is financial advice. It's meant strictly for educational and entertainment purposes. We can touch more on that in a bit. But to go over the agenda, we're going to go through the foundations and history, some of the key events throughout the development of this new world of crypto and cryptocurrencies and NFTs. We'll talk about how to research and invest in crypto. We'll also discuss safety, some of the pitfalls that you can face in this world, and how to stay safe and keep your assets safe. We'll talk about decentralized finance, as well as tax considerations to keep in mind, and finally kind of wrap things up with non-fungible tokens, or NFTs, and different ways and tools you can use to research and invest in NFTs. There's a lot of information in this course. Ultimately, the goal is just to kind of give you guys a window into this world and some kind of starting off points. So this presentation will be sent out to you at the end of the course today, and you can continue to explore. All of the different pages have icons at the bottom with a little rabbit hole, as well as some links where you can dive in and explore the topic further. So let's start off with the foundations and history. Really, we're talking about money in its true form with Bitcoin. Looking way back, a huge amount of assets and different types of things were used as money, right? Bartering had its limitations. If you had fish, you were a fisherman, and I was a potter and made some great pots. You wanted my pots, but I was allergic to your fish. Obviously, we had a problem. Maybe I was even full, and I knew your fish was going to go bad before I could eat it. We had another problem. So we need some sort of a third medium of exchange, which is one of the key functions of money. In addition to that, a store of value, something that's going to last over time and keep its value. And finally, a unit of account. So within a community, we want to be able to denominate things within a consistent unit. So if you look back in time, in Micronesia, they used huge stones as value. If people were paying in dowries, even today, cows have been used as value. Salt has been used as a monetary unit, which is where the word salary actually comes from. The sal is Latin for salt. Shells have been used as money, right? So cowrie shells, all the way up to, of course, gold coins, Roman coins, and what we use today, of course, paper fiat currency that may or may not be backed by something more than that government's military. And before Bitcoin came out, there were also attempts to do some cryptography. So eGold was an early attempt, and Cypherpunks was a group that was focused on those early attempts to create digital money, essentially. Let's touch on some of the characteristics of money. You want money to be durable. You want it to be portable. You want it to be divisible, and it needs to be uniform. It has to have a limited supply, so it retains that value, and it needs to be acceptable. People need to be able to want those funds as you have them, or when you want to exchange them for something. So we'll come back to that over time, but you can see how shells might not be uniform, how giant stones in Micronesia might not be portable, and so forth. So those are some of the limitations of prior forms of money. You also have, as we see recently, looking at the limited supply or lack thereof. Currently, the government is able to print money when it has a problem. And this is, the Fed's balance sheet, the money's in circulation, which in the last few years we can see has exploded as we've battled various things from pandemics and so on. And when we do that, when we have that increase in the amount of the money that's in circulation, of course, it erodes the purchasing power, which you can see here in the US dollar over time. So that again goes back to that limited supply that's necessary. And Satoshi Nakamoto put Bitcoin out into the world in 2008 in response to these weaknesses and limitations of funds. And the first block on the Bitcoin ledger, and just for those who know, Bitcoin is a blockchain. A blockchain is a ledger, so it's basically an online shared ledger. You can see transactions back and forth, and it's shared on multiple computers. But he was in the first block that was minted. He made reference to the bailout of the banks in 2008. And it was in response to this limited supply or lack thereof in existing currencies, or the collapse of currencies in Argentina and Venezuela and so forth, that Bitcoin was created. Satoshi Nakamoto is an anonymous individual or group of individuals, and no one really knows who he is. But you can read the actual Bitcoin white paper that explains how Bitcoin works and some of its properties at the link there. With regard to limited supply, there are only 21 million Bitcoin that will exist. And in the beginning, with regard to money and its acceptability, you had a limited number of people who wanted to accept Bitcoin, right? So here you can see a guy in 2010, and he's trying to trade 10,000 Bitcoins for a few pizzas. This is an event in history that was celebrated annually now as in kind of a joking fashion, because everybody knows those two pizzas are worth a few $100 million now. But you also had a Bitcoin faucet. That was a website where somebody set up and they were just giving away free Bitcoins. If you solved a CAPTCHA, proved you're human, you could get 5 free Bitcoins. So this goes back to the acceptability. In the beginning, Bitcoin, nobody knew what it was, nobody trusted it, it wasn't acceptable, but that's changing with time. Also, without further events in terms of the history of Bitcoin, you had the Mt. Gox hack. So Mt. Gox was an exchange, one of the early exchanges where people could trade Bitcoin, and it was based in Japan. At the time in 2014, it handled 70% of all Bitcoin transactions. Ultimately, it was hacked. This was a big event. And it shows some of the limitations of centralized entities. So again, it was a centralized exchange controlled by individuals there, and ultimately it collapsed, and that impacted the price of Bitcoin a lot at the time. Another event with regard to the acceptability of Bitcoin would be the Silk Road, right? So you probably heard about the dark web and various websites where you could buy and sell drugs. You can see a screenshot of it here where the various drugs are denominated with a B with a line through it. That is the symbol for Bitcoin. And in the beginning, this was a place where people were willing to trade in a fashion with Bitcoin. They thought, a lot of people think and thought that it was untraceable, which is not the truth. It's kind of the opposite of the truth. Bitcoin is a public ledger. Everybody can see where the funds are going back and forth, and there's a lot of tools to trace it. But at the time, the view was that it was kind of untraceable. The founder of the Silk Road, Ross Ulbricht, ultimately was jailed for life. And you can read about the details around that and whether or not it's legitimate. outcome for him and efforts to free him at the links there. But again, this ultimately comes back to the acceptability of this form of money. At that time, it was kind of the dark world that accepted it. But over time, it's become more and more accepted. So the naysayers that are always had something to say in 2010, all they could say is no one uses it. 2012, they'd say only computer nerds use it. 2013, only drug dealers use it. 2014, only money launderers use it, and so on. Only gamblers use it in 2017. 2019, only a small percentage of the population uses it. 2020, only small companies use it. You have Tesla and so forth accepting it. And 2021, only small countries use it. So this is a reference to El Salvador, making it a accepted money within that country. So you can see how it's kind of traveled and continuing to gain that acceptability that is required for a functional money asset. Here you can see something which is referred to as the halving. And again, what we're talking about in that limited supply of money that affects Bitcoin, there's 21 million total Bitcoin that can exist. More and more Bitcoin come into the market through mining and a process called proof of work, where people with miners, it used to be just any computer would work. Now you have to have more sophisticated miners to compete and solve these complex algorithms. When they do so and they unlock a block, they are rewarded with a certain amount of Bitcoin. It used to be 50, then after a halving, it became 25 and so on and so forth. Currently, the reward is 6.25. The halvings happen roughly every 4 years. Or 210,000 blocks. The next one will occur in April of 2024. And what that does is it limits the supply. And as a result of that supply shock, oftentimes about 6 months later, you'll see an impact on the price. And with Bitcoin being the largest and preeminent crypto, it's kind of led the rest of the market in these bull and bear markets that initially was largely deriving from those supply shocks. We're going to skip this video in the interest of time and jump into Ethereum. So Ethereum is a separate blockchain. While Satoshi Nakamoto was an anonymous individual, we don't know who it was. The founder of Ethereum, Vitalik Buterin, is very much public. You can follow him on Twitter. You can read books, The Infinite Machine, about the founding of Ethereum and some of his co-founders. Ethereum is different from Bitcoin insofar as it is meant to be programmable money. It has its own coding language called Solidity, and people can write contracts with Solidity and using ETH, which is the monetary unit of the Ethereum blockchain, in order to do all sorts of things. And people come up with all sorts of dApps or decentralized applications that we'll get into a little bit later with Ethereum. Ethereum, by contrast, doesn't have a hard cap. It does have controlled inflation, and it was proof of work, which is that high intensity, solving of algorithmic problems to unlock further emissions in the blockchain that is used by Bitcoin as well. However, in the next few months, they're shifting from proof of work to something called proof of stake, which is going to drop the overall energy used by about 90%. Just based on the way that the transactions on the ledger are codified and tracked. So we'll touch on that a bit more. But one of the key events in the history of Ethereum was the DAO hack. So a DAO is a decentralized autonomous organization. And the original DAO on the Ethereum blockchain was a group of folks who got together and just kind of said, hey, we are going to collect a bunch of funds from various folks and investors, and we're going to deploy them and invest them in different projects within Ethereum that we think are promising. So a bunch of people sent ETH, which is that monetary unit on the Ethereum blockchain, to this address for the DAO with a great idea, but it got hacked. And when it got hacked, they had to decide, are we going to let the hacker get away with all these funds, or are we going to fork, which is when you take the code of a particular blockchain and you copy it and change it? That's called a fork. Are they going to do a hard fork and in a way to resolve the issue that allowed the hack to take place? And there was a big debate about whether or not to do this. They ultimately, with Vitalik Buterin's guidance, did do the hard fork. And so the Ethereum we know today has actually been adjusted And the original Ethereum is now known as Ethereum Classic. But this goes in reference to just kind of the debate about, is the code law, is it immutable? Can it be changed? Should it be changed? Which is an ongoing debate that people have, which we also saw in the block size war. So as Bitcoin became used more and more, and there was a desire to scale it up, transactions, as more and more people used it, became more and more expensive and slow and so forth. So there was a hard fork where somebody copied the Bitcoin code and changed certain things to create Bitcoin Cash. So there was a limit on the block size of Bitcoin of 1 megabyte. With Bitcoin Cash, it was 8 megabytes. So the goal was to increase the transactions that could happen per second and lower the cost of these transactions. And everybody who had Bitcoin also got Bitcoin Cash. So that's one of those things, when they copied it, they essentially took the ledger and copied the ledger, and they changed the code, but they allowed the wallet addresses that had the original Bitcoin to also have Bitcoin Cash, and in that way spark adoption. You can read about the individuals that were key to this movement, like Roger Ver. All of these slides, you could dive down for quite some time in all of the details, but we'll keep moving in the interest of time. Altcoins are alternative coins. They are basically any coin that is not Bitcoin, and there are thousands of them. At this time of writing, I think there's about 20,000 altcoins listed on CoinMarketCap. You can think of them like stocks. So we'll go and look at CoinMarketCap later, but you got regular stocks, you got penny stocks. It's very similar to that. All of these tokens represent different companies, different protocols, different initiatives, funny things, serious things. We'll dive into some of them, but that's what altcoins are. And you also had a phase around 2017 where we had initial coin offerings. So this was where it was basically a fundraising tool, a means by which someone could launch a new coin by receiving an asset of an accepted coin. So for example, when Ethereum launched, they accepted Bitcoin. And if you sent them Bitcoin, you would receive ETH in return at a certain rate, which was, I think, $1 at the time. It's going for about $1,000 right now. There were some ICOs that raised, one EOS, which was meant to be an Ethereum killer at the time, hasn't lived up to its initial goal, but they raised $4.1 billion. So it was pretty crazy phase at the time, and anybody could participate. It wasn't like you had to be an accredited investor or what have you. But over time, the SEC has stepped in. US citizens are blocked from participating in a lot of these ICOs. Master nodes is something else that had a big phase, and it was essentially running coins, ledgers online through the model of proof of stake, where anyone, anywhere in a decentralized fashion could set up a node and run the ledger on their own kind of virtual server in the sky. And in exchange for that work, they would receive emissions of that particular coin. These were much hyped in 2017. Many of them didn't have much utility, so they crashed thereafter. But the concept in general of proof of stake has gained traction. And of course, the move for Ethereum from proof of work to proof of stake is a big thing that people are anticipating in the months ahead. We also had DeFi Summer, which was 2020. And this was a situation where you had a lot of new decentralized applications that were allowing people to participate in different financial events in a permissionless way, in a decentralized way. So Uniswap was a key DEX, it's called, or decentralized exchange. You could think of it as like TD Ameritrade or Charles Schwab or what have you, but instead of a company running it, it's in the cloud. It's decentralized, and no one can really control what is traded, which assets are traded on that platform. You, as an individual, could also provide liquidity. So you could take some ETH that you have and you could pair it 50-50 with another asset to create a pool. And you then become the market maker in that decentralized platform. Anybody could do this. Just connect your wallet, provide those two assets. Then when folks are trading, you're able to receive the fees that are applied when those trades take place. So this created yield that folks were able to earn and kicked off a whole bunch of crazy applications, and people were farming yield and they were farming pickles and yams, and things got completely crazy. But we can touch on that a bit later. Airdrops. Airdrops were almost, they always kind of existed with, as mentioned, with Bitcoin Cash. If you had Bitcoin, you automatically received Bitcoin Cash in a way when that was hard forked. With airdrops, it's a little bit different, but also a reaction to the crackdown on ICOs, because this is a way to launch a project without selling or being worried about having sold a security, right? So an airdrop, the way it works is there might be a particular project, and they would set out a certain number of tokens for their project, let's say 100 million, and they would set aside 25% as an airdrop to their users. So for example, some notable airdrops of recent time were Uniswap, which was that decentralized application, ENS, which was the Ethereum name service, which is essentially a way to buy domain names on Ethereum, Optimism, which we'll talk about in a bit, which is a second layer chain, ApeCoin, etc. So people who were the users of these protocols or these projects would just automatically get the asset, sometimes a governance token, which we'll talk about, but essentially the tradable token you would just receive for free. And that was a way to get around the limitations the SEC was providing on ICOs, and to make a token tradable and live. So here you can see the distribution of ENS. They reserved 50% for their community treasury, and they reserved another 25% for various contributors, and they reserved 25% for their airdrop. So once that airdrop was out there, people could take the airdrop, they could take ETH, they could create liquidity pools on decentralized applications, and suddenly it's tradable, and suddenly it has value. And in this way, new teams were able to bootstrap new projects. Scaling Bitcoin and Ethereum. So with all of these protocols, as there's been increased adoption, things have slowed down, prices have been higher, and they're looking for how do we scale these up to the world population. And one of the ways they've looked to do that is with what are called layer 2 blockchains. Arbitrum, Optimism, Polygon are layer 2 chains for Ethereum. Essentially all it is a chain where you can have a lot of transactions at a very cheap price, which occasionally will be written to the main blockchain. The Lightning Network is that version for Bitcoin. And these are ultimately probably Bitcoin, the blockchains that most people will be using just because of price and then the speed of transaction. Real quick overview on NFTs or non-fungible tokens. This is essentially a type of token. It's a token standard that allows people to have an asset that they can prove ownership of. So this little rock you see here was selling for $1 million. There's 100 of them. Part of the reason why somebody would buy a JPEG for $1 million is because in this case, it's a historical artifact. These ether rocks were some of the very first NFTs. But NFTs have value in some very unique ways. For example, recently there was an article in the New York Times about an artist. She was selling her beautiful artwork for $14,000 or so dollars. She got repped by a gallery. The gallery convinced her to sell them some of her artwork, which she did, and they in turn then went on and sold it for $1.5 million, of which the artist received nothing, right? Whereas with NFTs, it can be a contract coded where you can essentially say this original creator and their Ethereum address, let's say if it's on the Ethereum blockchain, every time this asset is sold, they get 7.5%. So you can eliminate the starving artist in a way by creating these marketplaces where that artwork, as it gets traded and valued over time, the original artist is able to retain some of that. So there's a lot of value in NFTs that's being explored. NFTs grant you access to almost different clubs and groups with information, which is what Moonbirds and Proof are. CityDAO, anybody who owns the CityDAO NFT can participate in some of the decisions of this particular Wyoming jurisdiction. Music NFTs were recently launched and are growing, and some musical artists have launched songs where if you own this NFT, you will be granted 2% of the royalties from this song, or so on and so forth. So it's another way to bootstrap new projects and new creative projects and to reward artists. Finally, we're seeing a lot of growth with NFTs and artificial intelligence. So people are fusing artificial intelligence with NFTs, and it's a space that's exploding. Meme coins, just briefly, is fun. It's craziness. It's the biggest meme coin is Dogecoin. It started as a complete joke. Shiba Inu exploded as a Dogecoin killer. People get excited about this stuff. There's lots of history. There's fun. That Shiba Inu was launched on a Medium blog post by some anonymous people who just wanted to create a decentralized currency. It got a huge following, became worth billions of dollars in a matter of months. They used the funds to create actual applications, like their own decentralized applications, and it's turned into a real juggernaut. But ultimately, a lot of this is about fun, and there's tons of copycats and craziness. Another huge rabbit hole you can go down. Alt layer ones, Solana, you'll hear about, Avalanche, Cosmos, Near. These are all other blockchains that are essentially competing with Ethereum for market share. What makes them different? There's varying levels of decentralization in each of these blockchains, but ultimately they're trying to create more transactions at a cheaper price to allow new applications, new games, and so forth that can actually function on blockchains. Then we've got the metaverse, of course. This whole crazy world. There is no one metaverse. Let's shut off that video real quick. There is no one metaverse. There's multiple metaverses. It's just these digital worlds that you can explore in VR or augmented reality or just on your computer. A lot of them sell land. You can build on your land. You can own different characters and assets. And a lot of these assets or land parcels are actually NFTs, and they're traded as NFTs. And it's also led to a lot of gaming worlds, or GameFi, where apps like Axie Infinity allow the people who are playing to also earn, and you can own the assets that you create in the game. So that's a whole other world that's exploding. Of course, over all of this, we have regulation. We have the SEC, that's involved in making rulings about, for example, whether or not there can be exchange traded funds or ETFs of Bitcoin. So far, they have denied all those attempts to create ETFs of Bitcoin. Accredited investor laws are enforced in the US. There's, limits on the participation, and as we mentioned, on certain things like ICOs. So everybody's kind of watching regulation. China bans, unbans various crypto elements, as well as India. Certain havens in Wyoming are trying to welcome, innovation in this area, while you simultaneously have other areas like New York City that are much stricter about what they allow. So that's something to be aware of. On the geopolitical stage, of course, as mentioned, we have El Salvador that has embraced cryptocurrency, in particular Bitcoin. It's a national currency. They've offered anyone who uses their application, which uses the Lightning Network, to buy and sell and trade Bitcoin. Every El Salvadorian citizen can get $30 of Bitcoin for downloading that. And they can use the Lightning Network to, do something as small a transaction as selling some oranges in market. So that's going on. We have in the US, an executive order put out by President Biden for all of the kind of governmental entities to explore crypto and how it can be leveraged in that innovation that we can take advantage of and not be left behind. You also have China, which is creating the digital yuan, central bank digital currency. A lot of governments are looking at this. It's important to note that a central bank digital currency in many ways can go against kind of the ethos of crypto, insofar as, if it has surveillance, as one would expect in China in terms of what people are buying and selling, or as well as the difference with Bitcoin, of course, is there's that 21 million cap, right? But if you have a digital central bank currency in the US, and they can just print more and more, it doesn't really solve that problem. One thing we may be able to touch on later, of course, that has ramifications of late, is the US seizure of Russian assets as a result of their invasion of Ukraine. That may lead more countries to invest in Bitcoin if they feel like, their assets could be seized at any time. So that's a current element that's talked about a lot. But right now, if we come to the present day, and this is really the end of the historical overview, but we're in the middle of a bear market, and we've seen some crazy collapses and contagion as a result throughout the crypto universe in the last few months. So Luna collapsed. Terra Luna was a platform that was tied to what's called a stable coin, which was UST. In this case, it was an algorithmic stable coin. So a stable coin is essentially something that's pegged to something. In this case, usually it's a US dollar, let's say. So there's USDC, which is US dollar coin, and it's pegged 1-to-1 to the dollar. There's also USDT, which is Tether, which is also pegged 1-to-1 to the dollar. The difference is that those stable coins are backed by actual US dollars, and they've been audited and so forth. Whereas UST was an algorithmic stable coin. So you could trade 1 Luna for 1 UST at any time, in theory. And ultimately, the company behind Terra built up a big stash of Bitcoin to back the UST stablecoin. But ultimately, it was algorithmically backed. It wasn't 1-to-1. And there was a lot of talk about how this would never work. And it was susceptible to bank runs and attacks. And ultimately, it was attacked. So you had a high net worth individual or a hedge fund or somebody who took billions of dollars and attacked the peg, and they broke the peg from the dollar of UST. And then once it went off peg, there was essentially a bank run and it collapsed. So you had this entity and people were using UST, they were staking it to earn yield on a platform called Anchor, earning 20% yield, some of which was actually backed by transactions and fees, and some of which was just kind of marketing costs. But ultimately you had this collapse of this entity that had millions and millions of dollars. And that led to contagion, which we've seen on some of these entities like Three Arrows Capital, which was a hedge fund that had huge exposure to UST and to Luna, as well as to a number of what are called CeFi, or centralized finance entities like Celsius, BlockFi, Voyager. These were kind of like crypto banks that you could put your assets with and earn yield on, but ultimately they had a lot of exposure to Luna or to other entities that had exposure to Luna. And all of this contagion led to bank runs that they weren't able to fill. So a lot of them had to pause withdrawals, and it's led to a lot of craziness. Of course, we also have the war in Ukraine. We have a fiscal environment in a macro sense that has changed from quantitative easing to tightening. So all of those elements are affecting the current bear market. That's where we are today. It's a bit wild and crazy at the moment. But let's dive in real quick to research and investing. So if you're just getting started, if you've never done anything in crypto, the basics would be to connect your bank account, Wells Fargo, Bank of America, what have you, as an on-ramp to the crypto world to something like Coinbase. So Coinbase, you can see the URL there. You can set up an account. You can connect it, as mentioned, to your bank. You can transfer in some funds, and you can just begin to play around just on Coinbase. It is a centralized entity, but it's very well regarded, probably the top entity in the US in the crypto world. And they have a variety of tradable assets directly on Coinbase. You can also
probably say it's an exchange.
It is an exchange, absolutely, yeah. But you could say just buy your Bitcoin and you could keep it there and do nothing else if you wanted to. But you could also, if you want to dive deeper, you could set up your own wallet, which could be what's called a hardware wallet or a ledger, where you're controlling your own crypto with your own keys. Or you can use something like MetaMask, which is you can use it as a browser plugin. And MetaMask is your own kind of wallet and identity in the decentralized world, allows you to access a variety of different decentralized applications, which we can touch on. Then in terms of research, there's CoinMarketCap and CoinGecko that list all of these various crypto assets. And I would be remiss if I didn't call out Twitter, which is huge in the crypto world. There are tons and tons of folks that are always tweeting about the latest topics, whether it's regulation or new projects that are launching on Twitter. And it's actually called Crypto Twitter, and you can explore and learn a ton from those individuals. And you can also, if you're technically oriented, you can explore the actual blockchains. You can look at the actual contracts, and all of that is public and viewable on tools like Etherscan. There's also entities like Masari Research, which is kind of a high level research hub. You can, they have free products and also you can subscribe. Nansen is a platform that tracks actual wallets. Again, everything is on the blockchain, but sometimes it's hard to read, and Nansen makes it easier to follow what smart money is doing. DeBank is another tool that allows you to explore the blockchain and the assets in different wallets to see what's actually happening, as is Zerion. And as mentioned with crypto Twitter, Chris Berniski, he's a gentleman who wrote the book Crypto Assets. You can follow him on Twitter. Anthony Pompliano is a Bitcoin proponent who has a podcast. You can follow him. Crypto Cobain, another unique individual, you know, as well as the president of El Salvador. These and hundreds of others of folks involved in the crypto world, you can follow them and learn from them on Twitter. So let's dive in and talk a bit about safety. $14 billion was stolen in 2021. So this includes exchange hacks, social engineering attacks, protocol bugs, project rugs, where they kind of launch the project, get a bunch of funds, but don't ever complete it. It's called a rug, and malware. So there's lots of issues that you need to be aware of. It's not meant to, you know, scare anybody off, but it's good to have open eyes with this. So with regard to exchange hacks, they say not your keys, not your crypto. You want to, you know, use the best exchanges. Coinbase is a great one. Over the years, there have been some shadier exchanges that they'll often list smaller assets. So you're taking a risk there. It's good to be aware of the risk that hacks can take place, and also to spread your assets around as a method of diversity. Social engineering. Are people talking to you on Twitter? Is it spammy links? You want to be very careful about what you're clicking on, because if you click on the wrong link, you know, in a way they can infiltrate your wallet or track things, or, you know, you can essentially get hacked on an individual basis through social engineering. So it's good to be careful about what you're downloading, what you're clicking on when you're interacting on social platforms. Protocol bugs, sometimes, hey, the developers mess up. We saw it with the DAO hack. It happens all the time here and there. And, you know, to avoid that, again, it's just a matter of diversity. In this whole world, you don't really want to mess around with anything that you really need to live. You know, you can, I have, but it's good to be aware that things can go wrong and to trying to spread your eggs around, right? User error, yeah, you are, you know, maybe sending assets via an address that you're copying and pasting. It's good to double check just to make sure. There's stories about people who mined Bitcoin and they lost their hard drive where they originally had the mined Bitcoin worth hundreds of millions of dollars. And so again, those are all kind of user error, nothing you can do about that. But you can explore these later. It's just good to be aware. You can find lots of threads and stories about this to learn on Twitter. But let's dive into decentralized finance, which is really exciting. This is a whole new world. But, you know, there was a time where you needed a bank to give you an approval to get a loan. Or sometimes at certain periods of US history, right? Maybe they wouldn't give you a loan because something unique about you, maybe the color of your skin or what have you. But DeFi opens up a whole world that is permissionless, right? So if you have the collateral, doesn't matter who you are, you can come with your wallet, you can provide that collateral, and you can automatically get your loan. And we see that across MakerDAO, Aave, Compound. These are entities where it's permissionless, and this has really exploded. It's important to know the difference between DeFi and CeFi. As I mentioned, CeFi is centralized finance, which are like kind of crypto banks, where it's, you know, it's a real company with people that you're dealing with and having to trust that they're making smart decisions. Not all the decisions of these CeFi banks of late, Celsius and so forth, have been on the up and up. Lately, they gave some loans out, for example, in the Luna fiasco that were backed by no collateral. So DeFi, on the other hand, is a code, and it's not going to allow a loan, for example, to take place without the collateral being there. So all the DeFi applications in this latest collapse, they're all doing fine because they, in a way, didn't have those human errors. DeFi Pulse is a site you can use to explore a lot of these individual applications. Super cool, shows the volume, TVL, which is total value locked. You can see what the most popular platforms are. It's a great tool. And here's an example of just a few of the many protocols that are out there. Uniswap, we mentioned, is a decentralized exchange. MakerDAO allows you to borrow and lend. They have their own stablecoin DAI. Ribbon protocol is pretty cool. Ribbon has automated options. So selling calls, selling puts, it's doing everything on an automated basis. So maybe in the past you needed to have a certain net worth or get accepted by a certain hedge fund to be able to do these kind of strategies. But some of these decentralized applications allow you to connect your wallet and participate in these option strategies in a permissionless way. Alchemix is another example of a DeFi application that has self-repaying loans. So they're earning yield on the assets that you've provided as collateral to repay the loan. I haven't used that one actually, but there's lots to explore. DeFi tokens, we can jump into that later if we have time. But I do want to touch on taxes just in general. At a high level, crypto assets are taxable like property in the US. Different jurisdictions, treat them differently. But in general, if you're getting an airdrop, it's treated as income. If you're trading taxes, the same sort of short-term and long-term capital gains apply, and it can be a lot to track. And so if you have a wallet and you're making all these transactions, you might want to use a service like Token Tax or any of these competitors that is able to essentially come tax time, take your wallet address and see what the actual transactions were, when they occurred, and let you know your tax bill. Non-fungible tokens. Okay, let's jump real quick back into NFT and some of the history. Started out 2012, 2016, just some various experiments on different blockchains. Didn't really work well. Bitcoin isn't really meant to hold NFTs. And ultimately, you had some standards that were established on the Ethereum blockchain, 2017, 2020. And that's when things really began to pick up speed. You had the CryptoPunks. There were 10,000 of these CryptoPunk kind of artworks that were put out for free in a kind of homage to cyberpunk movement in London pop culture. Those are, they were before the crash, they were worth like 300,000 at the floor price. Floor price is the cheapest price that you can buy something. Now I think they're like $50,000 each, ultimately from a free asset. You had Crypto Kitties, which had game mechanics, kind of fun on the Ethereum blockchain in those early years where you could adopt and breed and trade these Crypto Kitties. And we've seen those kind of gaming elements of NFTs really take off. And that's something that's probably going to explode in the future, the gaming NFTs. But NFTs took off a huge amount in 2021. So you had Sotheby's, you had Christie's suddenly auctioning these digital assets. One gentleman in the NFT world named Beeple had his everydays piece, which was the first 5,000 days. He did a new artwork every day, and this kind of montage of all of them, collage, sold for $69 million. So things really began to take off in 2021. And as mentioned, we have a lot of experimentation going on around music NFTs and so forth. There's tools to explore NFTs. One of the main ones is OpenSea. It's the main exchange for NFTs that you can explore. There's competitors like LooksRare. LooksRare did kind of a vampire attack on OpenSea, which they basically gave all the users, based on their trading volume on OpenSea, they gave them the Looks token automatically, which you could then stake on LooksRare to earn a percentage of the fees of people trading on LooksRare. So this was, just one of the many kind of stories you can dive down where, LooksRare was really looking to compete with the main entity OpenSea, which wasn't really user owned and wasn't rewarding users for participating. Here, LooksRare is rewarding users every time you list, every time you trade, you're earning looks. You can stake looks, and so that was kind of a unique story within the NFT trading realm. There's other tools like gem.xyz, which give you kind of looks into the rarity of different NFTs and things that you can explore. They were bought by OpenSea recently. Trade Sniper is another tool that allows you to see the rarity of a particular NFT on OpenSea. This is a Chrome add-on. Anytime you're doing a Chrome extension or add-on, you want to make sure that it's a verified extension, has a ton of users, just to make sure you're using the right one. But those are all tools to explore NFTs. So ultimately, this is a lot of information. they very well may be overwhelming, but it gives you kind of a wide swath and view of the whole crypto world. And there's tons of stories here. But if you want to kind of just get started and explore this realm, these are 3 tools that I think would be helpful just to kind of dive in and get more exposure. One is Bankless. Bankless is run by 2 gentlemen that are very keen on the Ethereum world, but they also cover other blockchains, and they have a newsletter, which is their Bankless newsletter. I think it's free. There may be a paid version. And then they have YouTube videos, like for example, when Luna collapsed, they have a great hour-long discussion of what happened and why, and all the play-by-play. Coinbase Learn, as I mentioned, Coinbase is a very popular platform that you can use to onboard into crypto. And Coinbase Learn is a section within that website that's just meant to educate you on all these things. You can take your time to learn about how to set up a wallet. You can learn about DeFi. You can learn about a whole variety of different things at your own pace. Rabbit Hole GG is another tool, and it's a little bit more complex, dealing with some decentralized applications, but it allows you to get rewarded, I believe, in some of the tokens of different applications by doing exercises on those apps to experiment and learn how they actually function. So those are tools that you can explore, and we'll send this presentation out, right, so that you'll be able to take a look and dive in later at your own speed. But I'll just go real quick while we have a bit of time here to show you what some of these things look like when you actually play with them. So let's jump into CoinMarketCap. And if you can see my screen here, this is CoinMarketCap. You can see, you know, similar to stocks, you have a list of all of these different assets. They're ranked currently by their market cap. So you can see Bitcoin's #1, Ethereum, etc. Tether is that stable coin I mentioned, USDT, USDC, also a stable coin. Again, these are audited and backed 1-to-1 by US dollars. BNB is the token of Binance, which is Binance Smart Chain, a separate chain. XRP is really around a centralized entity focused on remittances. Cardano is a competing blockchain. Solana is a competing level 1 blockchain. Dogecoin, as we mentioned, a lot of folks know that meme coin, kind of a joke. So you can kind of go on. All of these entities have a story. Shiba Inu, another meme coin. Uniswap is the governance token of that decentralized exchange. So you have these different assets, and you can dive into them. Decentralized, Decentraland is in the sandbox. These are metaverse plays, as is ApeCoin. AVE is the token, governance token of that decentralized application, allows borrowing and lending and so forth. So if I click this, it's going to take me to the AVE page, Aave, I think it is actually pronounced. And you can see more details about it, the circulating supply, what the fully diluted market cap would be when all of those tokens are emitted over time. And you also see here contracts, right? So it says Ethereum. Here's the actual contract address for Aave. And you can see that it has the Fox here, add to MetaMask. So if you want to add that token to your MetaMask so that you can see it in your wallet, that's how you would do that. So let me just move this a little bit, jump back to the presentation. And I want to show you guys something else. Let's look at the bank. So here's an example of random internet address. And on the bank, it's looking at all the details on the blockchain of this random internet address. You can see that this wallet in particular has assets on these various different blockchains. You can see that it has assets in different applications, like Ribbon, looks rare. You can see, you know, essentially everything that's going on with this particular wallet. That's what we mean when we say it's all public and on the blockchain and visible. You can click on NFTs here, and you can see the NFTs that are associated with this particular wallet, what they hold, what they're worth by their best estimate. It's not necessarily accurate. these different NFTs are from different projects that have different purposes, and you can dive into that whole realm. Let me see if I can show you guys something else. Like, let's go do a trade on Uniswap.
So Jeremy, so the wallet you were looking at is somebody's wallet. You don't know who it is.
Yeah.
But it's because the blockchain is viewable by all. You can go in and look at that wallet and see what the assets are. You can't figure out who it is, but you can. So because again, it's the blockchain is viewable by all.
Yes.
You can see what's going on. You don't necessarily know who the people are, but it's totally, that's why it's the whole decentralized concept, that there's no central entity. It's the blockchain is the ledger that everybody can see.
Exactly.
Okay.
Yeah. And that's what I mentioned. There's a website called Nansen. Let's just jump there real quick. Nansen, there it is, Pro AI. So this is a website, a service, and that literally all they do is look at these wallets and track the information that's flowing, and what they identify. Maybe someone bought something really early that then exploded later. Maybe it was CryptoPunks, maybe it was Bored Ape Yacht Club, maybe it was Shiba Inu, whatever it happens to be. Now it looks like I need to pay to get pro access, but these guys track those wallets, because maybe they call that smart money, right? And it's taking a bit to load, but you can begin to see all of this it's public information. It's on the blockchain, but if you go to Etherscan, it might be a little bit harder to decipher what's going on. Whereas with tools like Nansen, and I find even Nansen to be a bit complex, but in general, that's what it's doing. It's saying, hey, these wallets have done some smart things in the past. What are they doing now? What are they jumping into now? And so you can dive in and explore. They have various, it can be quite expensive for their highest level plans, but that's what Nansen is doing, really, just looking at that public blockchain. And I mean, it's funny because, again, a lot of people think Bitcoin is this shady thing used by criminals, but it's actually like worse than cash. For if you want to do a crime anonymously, cash is perfect for it, right? Because no one can trace it. Bitcoin is literally a public ledger. So like when Mueller was indicting all these people and tying things to the Russians for interference in the election, a lot of what he was also doing was seeing Bitcoin payments and tracking it on the ledger and where it was going. Everything's visible. And a lot of people have been indicted, and or if they've conducted hacks, like there was a big exchange hack, and this was all over the news a few months ago. This crazy couple in New York was indicted because they were trying to launder money from a huge I think it was Bitfinex, that hundreds of millions of dollars, maybe even billions, were stolen. But the hacker wasn't able to offboard them and get them into like a tangible, usable form, because all of the exchangers could see the hacked funds, and they're literally on the blockchain, and they're literally labeled as like, this is the hacker's wallet. And so there was nothing that they could do. And they were trying to like buy, cards at Target to try and offload the money, and they couldn't do it, and they're in jail now. And there's tons of crazy stories you can read about online, but let's just use, for example, I'm on Uniswap. I'm going to disconnect for a moment, just show you. If I go to Uniswap, it's going to ask me to connect my wallet, and I'll just click on MetaMask and it'll say connected. Okay, great. So now I'm connected. Let's say this wallet has 1 ETH in it. So my balance is 1 ETH. And let's select a token. So now I want to trade from ETH to, let's buy some Shiba Inu. So now I selected SHIB, and I want to buy 0.1 ETH worth of SHIB. It's going to fetch the best price. That's going to get me 10 million SHIB. Now I'm going to click swap and confirm swap. Waiting for confirmation. It now opens this window, which you could probably see over here on my screen. It's just waiting for confirmation. Let's see if it'll load. Internet's a little funny at the moment. Here it comes. And I can pay a little extra to speed up the transaction. So I'm going to do that. I'm clicking edit. I'm going to click high because I want my transaction to go through quickly. And then I'm going to click save. So I'm going to pay the miner, in this case, a little bit more of a fee to make this go through. And I'm clicking confirm. And
all we can see is waiting for confirmation in the spinner.
Oh, okay, you can't, okay. Let me see if I can show this another way. There's
We have
another
your window shared, Jeremy.
What's that?
Your window is shared into your Explorer there for internet. So if you shared your screen, we'd see what you're talking about.
Yeah, you want to share your whole. You want to share your whole
Okay.
screen, not just the app.
Oh, I see. How about, well, let me see. Here, now you can see it. Can you see it now?
Yes.
Okay, so it basically looks like this, and I clicked edit, and now I'm gonna click confirm. It's this, in this case, it's a little pop-up. And it's confirming the transaction. And now it went through. Let me go back to sharing my full screen. I'm sorry, I don't see the sharing screen is stopped. Now can you guys see everything?
Yes.
Okay, in the upper right, you see it says pending. So basically there's a little MetaMask wallet Chrome plugin. And again, all of these steps are explained on Coinbase Learn. But essentially I just used this extension in my Chrome browser to approve the transaction through my MetaMask wallet. Now it's pending. And now it says swap exactly 0.1 ETH for 10 million Shiba Inu. And now you can see in my wallet that I'm connected, I have a balance of 0.8964 and 10 million SHIB. So, and this is an entity, again, this is an entity that's decentralized. There's no there's an organization that's running it, but it's effectively in the cloud. And here where it says pool or vote. So again, voting, if you own the Uni token, it's a governance token, you can vote on different proposals, different listings, different ways they could chart a course for this company. And with pooling, that's where I mentioned you could be a liquidity provider. You could provide ETH and another asset and provide liquidity and then earn fees. So that's what those are referencing. But let's go ahead and look at another one that's a little bit more complex in the online decentralized world, and that's ribbon finance.
Hey, Jeremy, this is Ralph. I was wondering if we could ask a couple of questions before we run out of time.
Yeah, no, 100%. I think we're at 60 minutes. We should have another half an hour for questions. Is that right?
That's right.
Okay.
Oh, yeah. Okay. Very good. I'm
Yeah.
sorry. I'm way ahead.
No, all good. Yeah, we should be good. And I'll just wrap up right now with this, but this is another example of a platform. This is called Ribbon Finance. So this is a decentralized protocol that somebody has created. I'm going to disconnect just so you can see again the process. I come to this website, I click connect wallet. It's saying, okay, select a blockchain. Again, these are some of the alternative blockchains we mentioned earlier. So I click Ethereum, I click next. I click, Coinbase has their own wallet. There's other wallets. Wallet Connect has a variety of wallets. I'm going to click MetaMask and I'm going to click connect. And so now you can see in the upper right, here's an address from a MetaMask wallet. You can have multiple accounts in a given MetaMask wallet. But now I'm connected and you can see, let's click on the products page and see what their products are. Okay, so here you have a covered call product, a put selling product, more covered calls with various different assets. In this case, ETH. They have the total projected yield. So they're projecting an annual yield of 26% on this particular strategy. Put selling. So, covered calls, for anybody who doesn't know, is like you own the asset and you're selling the right to somebody else to buy that asset at a certain price. And in order to get the right to do that, they have to pay you a premium, and that's where you're earning the yield. There's downsides to this in that you could miss out on upside if the asset takes off and is flying high. So that's why you might not want to use these. Again, no financial advice in this presentation, but this is just kind of some exposure to some things that are out there you can play with small amounts of money. And again, this is completely permissionless and decentralized. You don't need to be accepted by some hedge fund to participate on some of these strategies. You just need to go to this particular page and select a strategy and make your deposit. And usually there'll be limits on how you can withdraw. Maybe weekly you're able to withdraw, and there are risks. All of these protocols, as mentioned, maybe the developers, there's a bug in the code, so that definitely happens. Things can get hacked, but a lot of these, like Ribbon, have been around for quite a while, and there's things to explore, and just to get an understanding of how DeFi works. It can be a great way to do that. And again, Ribbon is one of many. And you can also go to bank, that site from earlier, and you can see some of the different protocols that are out there. You can also go to DeFi Plus. Let's just go to DeFi Plus, and then I'll open it up for questions. Sorry, DeFi Pulse. Here we go, DeFi Pulse. So DeFi Pulse, again, is just kind of a leaderboard of these sorts of applications, where when it loads, we'll be able to see within DeFi, you can see the total value locked. So you can actually see the total value locked in the last few months has collapsed quite a bit, because we are in the middle of a bear market and there's lots of craziness. But you can also see, looking back here, there was only a few hundred million locked in 2018, right, when these things were just being started. And it was, this is crazy exciting time. That's one thing about crypto. There's always new things that are being discovered and launched. So you had a huge adoption from 2020 on, where hundreds of millions became hundreds of billions of total value locked in these various protocols. As we scroll down, you can see some of the top ones: Maker on the Ethereum blockchain, which is key for lending; Uniswap, one of the key decentralized exchanges; Aave for lending, and a whole variety of others. As we scroll down here, Rari's is one that, again, decentralized. Here's Ribbon Finance, number 28 on the list. So you can see there's a whole variety of different platforms to explore. And so, DYDX, just as an example, that's derivatives. It's a derivatives exchange. So you can use leverage and do crazy things. Those are blocked, as you might imagine, to US citizens, if you're not an accredited investor, et cetera. And so just something to be aware of there. But yeah, let's jump back to Q&A, because we've touched on
Jeremy, before you start the Q&A, you've mentioned wallets several times. And so you can have many wallets. It sounds like you have quite a few different wallets that you've, as you were demonstrating different things, you went into this particular wallet that had this much and so forth. So can you maybe expound a little bit on that before you get into the Q&A?
Yeah, no, absolutely. So within a MetaMask wallet, you will have key phrases. You can set it up with a passphrase that you're able to access it with. But within that actual wallet, you can create different accounts with a unique address. And, I would recommend having different accounts, because you might have your main account, but maybe you want to interact with a decentralized finance protocol that's new. Or maybe you want to participate and accept a free non-fungible token drop, and you don't know how safe it is, or or just in general diversity and having your assets in different places. So if there was a compromise on social media and you clicked the wrong link, and one of your accounts was compromised, you don't lose everything. Or again, it's just kind of a matter of safety. And some people, you kind of have to decide for yourself with regard to safety and with regard to your level of risk. Some people may want to just keep things on Coinbase, and because they feel that's a safe, platform, and they're not going to try and self-custody in their own wallets. They're just going to set it and forget it in Coinbase. A lot of people will do that. But yeah, if you are using your own wallets, if you are using MetaMask, if you are going to interact with anything that you think might be risky, then it's good to have kind of like your risky account, where you would wouldn't be the end of the world if something turned out to have an issue or be malicious, because you wouldn't have much in that account to lose. And I guess, there's also people, who have tons and tons of funds, and they will have it in what's called cold storage. And that's just completely disconnected, which is something else people do, which, if they're involved with crypto a lot, they might have a computer that they use with a hardware wallet, and they only use that computer for crypto, and they only use it for trading, and they never go on any websites with social media or the internet. It might just be, completely isolated. I mean, it just depends on you, what you feel comfortable with. If you're just learning and you want to experiment, take an amount of money that you wouldn't feel bad if you lost it, and just learn. And then as you begin to learn and you feel more comfortable over time, then you can decide what the right path is for you. But yeah, generally speaking, having multiple accounts or within your MetaMask wallet, as an example, is a good safety precaution.
Cool. Why don't you get into the chat and take a look at the questions?
All right.
Yeah, Jeremy, our first question is going to come from Ralph Fairbanks, and Ralph is invited to unmute himself and share his question with you.
Yeah, hi, Jeremy. Two questions. The first one, could you explain the concept of mining again? And the second one is, you mentioned how the government's been printing money. And so my question is how many people actually use cash anymore other than carry around in your wallet to really pay for things? So how big of an influencer is printing money? But more importantly, as it relates to cryptocurrency, is there such a thing as diluting the value of it the way the government wants to print money like?
Yeah, great. Great question. So with regard to mining, your first question, mining it's the process of essentially doing intense computations to solve algorithms that unlock particular blocks on the ledger, and different miners are trying to solve these algorithms to unlock and find or solve these blocks on the Bitcoin blockchain. They're competing with one another. I'm not super technical to explain all the details of like, it's a whole world. Literally, there are companies that every slide in this presentation, they have whole teams that focus on them, or there's companies that literally all they do is mine. So they don't trade, they don't do anything with decentralized finance. All they do is they have huge miners set up, which they're called like ASIC miners. They're like dedicated almost computers with high computational power that, they would set them up in places with very cheap electricity, like next to hydroelectric dams, just to solve and crunch these equations and solve these blocks. And in doing so, unlock, the rewards that come from mining. So yeah, you can explore online and learn a lot more depending on the level of detail that you want to go, and some of the different companies like Bitfury that are just focused on mining. But yeah, that's a whole world in and of itself. And I personally have never mined at all. I have run masternodes, which is the proof of stake version of mining. You're not solving these computational problems, but essentially you're running a node on a virtual server in the cloud that has a copy of that project Bitcoin, or that project's blockchain or ledger, and you're facilitating the transaction and keeping track of those transactions and receiving that reward. So you could call it mining the reward, but because it's a little bit different being proof of stake, they don't use that word. But yeah, that's a whole world in and of itself. With regard to crypto and quote unquote printing more money, 100% it depends on the project, which is why it's helpful to go to that website CoinMarketCap and look and research the details of the project, because you may see that there is no max total market cap there, which is like the project has no maximum. Or Shiba Inu, I think it was like $1 trillion, like the total max potential tokens in circulation was like $1 trillion. or higher even. So Bitcoin, yes, it has a cap of 21 million, but Ethereum, for instance, has no cap. It just has a set targeted rate of emission inflation. I think is like 1 or 2%. People actually think it will become deflationary because currently they voted to pass an upgrade that would burn a portion of all the fees. So every time there's a transaction on Ethereum, a portion of that fee would be burned and taken out of circulation forever. So really, to answer your question, it's just a matter of the individual project, and you do need to research that to have a real sense of the outflow and the emissions. It's also helpful to have a sense of who the investors are in a project, because as you saw with that airdrop graph of ENS, there was a certain amount allocated to the team and to investors. There was a certain amount allocated to the treasury, and there was a certain amount allocated to the airdrop. And the amount that's allocated to investors, usually they might have a 1 or a 2 or a 3 year lock on those tokens that they received in exchange for their investment. So tools like Nansen and to some degree CoinGecko or CoinMarketCap can give you a view into when those unlocks might happen. So where there might be sell pressure as a result of that. With regard to the US government and the cash, I mean, yeah, people aren't necessarily using dollars all the time. There's a million, digital versions of the US dollar, but ultimately that doesn't so much impact the inflation as much as how many more dollars are being put into existence. So if the government is deciding to do quantitative easing and they're out there essentially buying up a lot of assets, whether it's a digital dollar or a paper dollar doesn't really matter in so much as how much is in circulation in terms of impacting inflation. And of course, the interest rates that they set, which affects the borrowing and lending, and how much the banks put out into circulation and so forth. So that's why whether it's a digital US dollar or it's actual paper physical dollar, if the Fed's controlling how much is out there and how much is bought, it's going to impact inflation.
Thank you, Jereme, and thank you, Ralph, for the question. Our next question comes from Bix Norman. Bix, I'll invite you to come off mute if you'd like to. Otherwise, I'm happy to relay your question for you. I'll go ahead and relay it, Jereme. Bix asked, can you give some examples of actual things that people in this call or people today can buy with cryptocurrency?
So that's a great question, which goes to the whole acceptability. And, there are incidences of people buying real estate with crypto. There's specific companies that are working on putting real estate transactions on the blockchain. There have been incidences of, people buying boats and cars from entities, marketplaces that have allowed crypto. Elon Musk is constantly tweeting about how you can use crypto to buy various things within his ecosystem, as well as Dogecoin, which is kind of a little pet project he's adopted. But yeah, I would say at this time, it's somewhat limited in terms of its acceptability or the need for it, right? So it's also a question, okay, what is the need really? When Satoshi Nakamoto created Bitcoin, he imagined it being used as kind of a peer-to-peer currency, but it's become used more and more in terms of its true value, in terms of Bitcoin as a store of value. So people who don't want to see their savings eroded over time because of the constant, expansion of the money supply, they're going to try and find a safety within Bitcoin as an example. But then, of course, you do have a push, which is going to grow. And again, this is one of those things where this doesn't happen overnight, but with the Lightning Network and with applications where you can just download and send Satoshis, a very fraction of a Bitcoin, and you can, in El Salvador, as a trial market, you can buy and sell oranges for some Satoshis that you send to your friend via an app. That is something that is there. The feasibility of it is there. The owner of Overstock, which was, I think, formerly, or he used to work at eBay, I'm not sure. For a while, Overstock was accepting a lot of things, but a lot of merchants didn't like the volatility of Bitcoin. So they've been working to solve some things there. Coinbase also has a tool for merchants to accept crypto. and Stripe, which is one of the companies that is actually the infrastructure behind a lot of the payments on the internet. They've got a whole team that's dedicated to crypto now. So they're probably going to make it quite easy to accept cryptocurrency in the future. So merchants ultimately could have a widget on their site and the customers could decide whether they want to pay in US dollars or in a particular crypto. But it's still early days with regard to the actual usage of crypto to buy and sell. And in many ways, the US dollar is fine for that now, right? People are going to continue to have US dollar in some form or another. Venmo, PayPal, all these things in that regard are able to function. And so crypto, as it's growing, we're seeing adoption in different areas. You've seen the NFT world take off. You've seen decentralized finance take off. You've seen store of value take off. So there's these different use cases that have really grown in adoption recently. But in terms of like a marketplace, I think that's a need that you're going to see grow over time. And as more and more people adopt Bitcoin, then I think you'll see more and more merchants looking to support it. And as well as you have things like the Lightning Network making smaller denominated transactions more feasible. But yeah, to answer your question, it's still early days with regard to using actual crypto to buy things.
Didn't Elon Musk allow you to buy, for a while, you could buy a Tesla with crypto?
Yeah, he did. And I think, they had to back out of that, I think probably because of the volatility or who knows what, but it's early days. Yeah.
To your point, is you invest in crypto and so forth, and you make money, you can, through an exchange, transfer it to US dollars and so forth and spend money. So it's not, it's all real. It's just, you may have to do an exchange because to your point, the volatility is creating challenges for retailers and so forth to accept it.
100%. Yep.
Thanks for that additional context, Dave. I want to next go to Kim Buckley. Invite Kim to come off mute and share his question with Jereme, please.
Jereme, thank you for doing this presentation. And I'm going to give you a heads up. I'm going to be pushing Dave and Susan to see if you'd come back and give us an update at some point in the future. The way this stuff changes, at the speed at which it changes, it seems like that would be the pretty near future. But anyway, thank you. So one comment you made, which just stopped me in my tracks, was the idea of AI and NFTs coming together. That's something that just kind of blew me away for a minute. Oh my goodness, where are we going with that one? Yeah. But anyway, my main question is, in your opinion, what are the main aspects of, let's just say, Bitcoin, which drive trust in it?
So part of it is history, I think, right? The longer that this blockchain exists and it continues to do what it is programmed to do, it gives more confidence and trust for folks. All of the things that have kind of gone wrong around Bitcoin have really been around Bitcoin, right? So the Mt. Gox exchange hack, right? That wasn't Bitcoin's fault per se. That was a centralized entity that was compromised. Bitcoin is just kind of chugging along. It's doing what it's been meant to do over time. It's emitting at the rate that it was expected to do, and that's a big deal, right? So in the financial markets like we have here, you never know when there's going to be a war or a pandemic or some new reason to increase the money supply, and people always have to be, dodging and moving around the interest rate changes by the Fed and so forth. With Bitcoin, you know what the emission rate is. It's in the code and it's not changing. And that gives people confidence and it gives people trust that they don't have in other areas. Now, it is still new, right? It's been around for, more than 10 years, really chugging along, doing what it says it's going to do. But there are people who are questioning, do we need to change Bitcoin in the future if, for example, the rewards that are given to miners are so small that it's not enough for them to continue securing the blockchain. You know, the last reward is supposed to be emitted in like the year 2140, I think. But so people are like, well, how are we going to secure the blockchain after that? A portion of each transaction, the fees would in theory then go to the miners, and that would reward them for securing the network. But you know, so there's going to be questions around that. There's always FUD or fear, uncertainty, and doubt that's pushed to try and manipulate prices and so forth. But ultimately, the trust comes from really a history of it doing what it's meant to do, and the code being, you know, essentially unchangeable, that give people confidence in it.
Great, thank you.
Thank you, Kim. We have another question from Ann Weller, who's joining us. And Ann, if you're comfortable, you can unmute yourself and ask, or again, I'd be happy to relay on your behalf. Seeing as I don't see Ann unmuting, I will ask the question on her behalf. Hope that's okay, Ann. Jereme, she's asking specifically about kind of tying back to Bix's question about what we can actually create or buy with Bitcoin. She's curious, is cryptocurrency tied to anything or any product that's actually been manufactured? Are organizations using it to create products or to manufacture things?
I would say that organizations are using crypto to fund and to bootstrap their development of protocols for the most part. I don't know of kind of a crowd fund, use the crypto proceeds to create like a real asset. But that is an interesting concept. I will say, it's a really diverse world, and another cool example of like an NFT that was used to create an asset in the real world was actually in El Salvador, where there was a team that was selling NFTs to like build a home. So you could buy this NFT for $10,000, I think, and they would use the proceeds, this group, to build a home in El Salvador. And they did this for a lot of folks that were homeless in that community. And that's how they funded it. So I guess that's an example of something in the real world that was built with proceeds from a crypto asset. But I would say the vast majority of what I have seen has been essentially a new fundraising mechanism whereby a protocol or a company is able to raise funds to build that protocol in the digital world. I will give you an example of another real world thing that was attempted to be purchased with crypto, and that is what's known as the Constitution DAO. Again, a DAO is a decentralized autonomous organization. There was a group that formed the Constitution DAO. They raised a ton of money to try and buy at auction, I think it was Sotheby's, they were auctioning one of the 15 known existing constitutions of the United States of America and the world. They ended up getting outbid. I think they raised $100 million or something from crypto ETH donations, and they got outbid at the end. So they weren't able to buy the Constitution. But that's another example, I guess, of funding that was raised. And people are always having crazy fun with stuff like this. So after the Constitution DAO exploded, lots of other DAOs cropped up, and there was a Free Willy DAO, which was trying to buy SeaWorld in order to free Willy, the killer whale. So there's all kinds of crazy stuff going on, but I would say for the most part, it's entities raising funds in crypto to build their online digital protocols.
Thank you, Jereme. I will pass things back to Susan Couch, our coordinator. Susan, that is all the questions we have, and in the sake of time, hope that you can take us to a conclusion here. Thank you.
Thank you, Ian, and thank you, Jereme. It was fascinating to learn about all this. Just a couple of things I want to mention before we close down the call. We are going to be sending out Jereme's deck, so you can glance through all those slides again. And I just want to point out at the bottom of almost all the slides, he has like a little icon called the rabbit hole. And he'll have some references, either a Twitter handle where you can go out and follow this individual on Twitter to learn more about what Jereme is referencing on that particular slide, or he'll have a link to some of the information. So that is very, very helpful if you want to do a deep dive on individual slides to get more information. And I also want to put in a plug. 2 weeks from this particular time slot, Dave Couch is going to be giving a presentation on fintech. So it's more financial discussion with actual real US dollars. And so if you have not signed up for it, I think you'll find it fascinating. And we're just trying to have our financial theme this summer a little bit from SMT. So once again, Jereme, thank you very much for the discussion today. So much information, and based on Kim Buckley's recommendation, I think we will be having some future conversations with you about maybe a follow-up to this topic. And Ian, that's all I have.
Thank you, Susan. Thank you again, Jereme, and thank you all for joining. Again, this will be posted on the HASP at Hope YouTube page at the end of the summer term if you'd like to revisit it. Thank you for joining us and have a great rest of your day.
Thank you.
Thanks, Jeremy.
Thank you.
Bye.